Oil prices are surging. The Strait of Hormuz is under threat. And the stocks most sensitive to what is happening right now in the Middle East are starting to move in a very big way. Make sure you subscribe right now and hit the bell so you never miss our daily stock analysis here on Stock Alerts Daily. Thanks for joining us for another edition of 10 Stocks in 10 Minutes. This week, we are looking at the 10 stocks most likely to benefit if oil continues to climb because of the Iran conflict. These companies will see direct impacts to their revenue, cash flow, and investor sentiment if higher oil prices continue. And we are starting at number 10 and working our way down to the single most sensitive stock to what is happening with oil right now. Make sure you stay until number 1 because that is where the most explosive upside potential sits. Let us get started right away. Coming in at number 10 is Enbridge, ticker symbol ENB. This is a pipeline company that moves oil all across North America. Now, Enbridge is not the name that suddenly explodes higher when oil spikes for a day or two, but when crude oil holds elevated levels for weeks, which is exactly what could happen if the Iran situation drags on. Infrastructure companies like Enbridge quietly benefit from sustained high throughput volumes. You could put Enterprise Products or Kinder Morgan in the same category. This is your steady lower volatility name on this list. Analysts still see about 20% upside on consensus price targets. Not the most exciting name here, but a solid foundation play if oil stays high. Moving on to number 9 is ExxonMobil, ticker symbol ExxonMobil. As of March 5th, this stock was trading at $149.92, already up nearly 30% in 2026 before this latest oil spike. Exxon is one of the most direct large-cap plays on crude prices. Higher oil means stronger production revenues. And this week alone, Exxon hit a new 52-week high of $159.61. Chevron belongs in the same conversation, but Exxon is the more direct play here because of its sheer size and diversified production base. 13 of 28 analysts still have a hold rating, though, which tells you that even at these levels, the stock is not universally loved. But if oil holds here, institutions go to Exxon first. At number 8 is EOG Resources, ticker symbol EOG. This is where we start getting more direct sensitivity to oil prices. EOG is a shale producer. Devon Energy and Diamondback Energy fit into the same category. These names respond much more quickly than Exxon or Chevron when crude moves. EOG has already jumped about 16% over the last month and is still trading below consensus price targets. If crude holds these levels, this is where the upside starts getting more noticeable. A shale producer with momentum, below consensus price targets, and oil surging. That combination is worth watching closely right now. Coming in at number 7 is ConocoPhillips, ticker symbol COP. This one is fundamentally different from Exxon. ConocoPhillips mostly produces oil. It does not have the same refining business to balance things out. So when oil moves higher and stays there, this stock moves more directly with it. We already saw that this week with a sharp jump on Monday when news of the Iran strikes broke. This is where the list starts getting tightly tied to the price of oil itself. Pure production exposure, less diversification, more sensitivity. Number 6 is Occidental Petroleum, ticker symbol OXY. Now we are talking about a more volatile oil name. When crude spikes on geopolitical tension, OXY tends to move harder and faster than the bigger, more diversified names. The stock is already up about 30% over the last 90 days. They just reported Q4 2025 earnings that beat analyst expectations by 88%. Earnings per share of 31 cents against an estimate of just 16 cents. Warren Buffett's Berkshire Hathaway owns a significant position in OXY, which tells you something about the long-term conviction behind this name. If oil stays elevated because this Iran situation drags on, OXY is one of the first names where you see sharper upside. But that works both ways. If crude pulls back, this one gives back gains fast. At number 5 is SLB, formerly known as Schlumberger, ticker symbol SLB. This is where the story shifts entirely. SLB works with oil producers around the world, providing the services and technology needed to drill and develop wells. If oil spikes for 2 or 3 days on headlines, this does not change much for SLB. But if crude stays elevated, producers start increasing their drilling spending. And when drilling activity picks up, service companies like SLB benefit enormously. This is not always the first stock to move when oil jumps. But if prices hold at these levels for weeks, this is where a powerful second wave of momentum builds. Number 4 is Halliburton, ticker symbol HAL. Halliburton is more heavily focused on North America, particularly U.S. shale. So when U.S. producers respond to higher oil by adding drilling rigs or expanding operations, HAL tends to react even faster than SLB. More domestic focus, more direct exposure to U.S. shale activity. Halliburton had a strong earnings report in January and has already been moving higher in 2026. If you are looking at the oil services space right now, Hal is the more explosive domestic play compared to SLB. Coming in at number 3 is Valero Energy, ticker symbol VLO. As of March 5th, this stock was trading at $230.50, already up dramatically this year. Refiners are a little different here. Higher oil does not automatically mean higher profits for a refiner. What matters is the spread between the cost of crude and the price of gasoline and diesel at the pump. But in volatile supply-driven markets exactly like the one we are watching right now, that spread can widen quickly in refiners' favor. Marathon Petroleum and Phillips 66 fit into the same group. Goldman Sachs just removed Valero from their conviction buy list, but the stock keeps climbing anyway. If this Iran story keeps energy markets tight, refiners move up this list very fast. At number 2 is Frontline, ticker symbol FRO. Now we are talking about crude oil transport. Frontline operates some of the largest crude tankers on the ocean. If tensions around the Strait of Hormuz impact shipping routes or create uncertainty around global supply lines, freight rates rise. And when tanker rates move, these stocks move fast, sometimes very fast. Frontline has direct exposure to global crude shipping disruption, and that makes it highly sensitive to any prolonged conflict that affects oil flow routes. And that brings us to number 1 on this list, the stock most directly tied to the shipping volatility we are seeing right now as a result of the Iran conflict. When oil prices rise because of geopolitical tension, most people look at producers first. But if shipping routes get disrupted and tanker availability gets tight, the real volatility shows up in the transport names. And the single most sensitive stock on the board right now is Scorpio Tankers, ticker symbol SDNG. As of the most recent data, this stock was trading at $45.62. 5 analysts have a strong by consensus rating on SDNG right now. The average analyst price target is $79, implying over 70% upside from current levels. The highest analyst price target is $83. Scorpio Tankers just beat Q4 earnings, reporting $1.62 per share against an estimate of $1.58. Revenue came in at $241 million, beating expectations. And just this week, the company announced major new long-term charter agreements securing cash flow visibility going forward. If the Iran situation keeps pressure on global oil flows and shipping routes stay disrupted, this is the most sensitive name on the entire board. 70% upside implied by analysts, strong by consensus, earnings beat, new charter agreements, and the Iran conflict is still developing. That is your 10 stocks in 10 minutes, Iran War Oil Edition. From Enbridge at number 10 all the way up to Scorpio Tankers at number 1. If you found value in today's analysis, please subscribe right now and hit the bell. Every single day, I bring you fresh stock analysis, and I do not want you to miss a single one. And if this video helped you understand the oil market better today, hit that thumbs up button right now. It takes 1 second, and it helps this channel reach more investors just like you. Drop a comment below. Which of these 10 stocks has your attention right now? Number 1, Scorpio Tankers. Or did one of the other 9 surprise you? I read and respond to every single comment. See you tomorrow with another fresh analysis. Do not miss it. And as always, nothing in this video is financial advice. These stocks are shared for informational and educational purposes only. Always do your own research. Always check NASDAQ.com for the current price before making any decisions. Investing involves risk, including possible loss of principal.